FM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you as we kick off a Wednesday here on the Financial Exchange. And I want to talk a little bit just about what we're continuing to see in markets in terms of just the breadth of different returns that we're seeing across different indices, different sectors, and why so much of that growth this year is concentrated in a small group of names. Mark, I'm going to read some returns for you. They're year-to-date returns for some of the biggest companies in the S&P 500. Microsoft up 51%. Apple up 41%. NVIDIA up 217%. Google up 49%. Meta up 164%. Amazon up 69%. Tesla up 79%. Those 7 companies, they are being referred to by investors as the Magnificent Seven this year because they're, quite honestly, their performance has been outstanding this year.
Do people who are naming groups of companies have no sense of irony or historical perspective? Do they not know every time you smack a moniker on a bunch of companies that appear to be moving together for whatever reason, you've doomed them? It's like the Sports Illustrated cover curse. Do they not know this? They never heard of the Nifty 50?
I've heard of the Nifty 50. I don't know. I mean, look, it's true. It is the same thing as the cover curse, and it's a simple regression to the mean. But I guess you spoiled my punchline, Mark. The question everyone is asking is, hey, why would I own these other 493 stocks in the S&P 500? Why don't I just own?
Oh, what an original idea! Gee, I've never heard that one before. Maybe I'm too old for this.
No, this is it's a question that gets asked right now, which is, hey, why do I not own more of this stuff? Because not just this year, but the last 3, 4, 5 years, it only seems to go up. Why am I not holding more of this stuff? Is what some investors are asking.
Sorry, I keep stepping on your punchline. Can I just say, if you own an index fund, which is market cap weighted, you do own more when they go up.
Well, I
know that's a technicality.
No, so why should someone not own just these 7 stocks?
I guess, why can't I just eat dessert? Why don't I just take vitamin A? Why don't I just wear gym shorts? Because moderation and diversification are bedrock principles in any undertaking. More specifically, when it comes to equities, sector returns change hands. If you like biblical references, New Testament references, the last become first, and the first become last. If I like to show that quilt chart internally here of the best performing sector by year. You see long streaks, and then patterns shift. Tech was in favor in the late 1990s. I asked snarkily, gee, where have I heard that question asked before? It was the late 90s. Sure. Growth was all anybody wanted to own, and any asset manager that dared own value or suggested that pets.com might not be a good place for the bulk of your retirement savings looked foolish because growth stocks outperformed for several years, and then they underperformed for the next 15, 10-ish. But it's because patterns shift, Chuck, and you've got to it's hard to pick both winners among companies and among sectors, and even more broadly among national markets, U.S. versus foreign, et cetera.
And the other piece there is it's really hard to be able to say conclusively, yes, this is when the pattern is going to shift for the future. You mentioned, foreign versus domestic. Mark, you probably have the dates better than I do, but 1990s through mid-2000, through like 05, 06, emerging markets was all that people were talking about during that time period because, well, not all people were talking about. They were talking about the tech bubble too, but emerging markets compared to domestic U.S. markets, there was dramatic outperformance over that 15 to 20-year period. Am I correct?
In the first half of I forget, the 90s, I want to say large cap growth, domestic outperformed EM, because EM really tanked in 98.
Yes.
There was a big currency crisis. Russia defaulted. It destroyed emerging markets. They came roaring back. But my guess is the cumulative or the annual, however you want to think about it, return on large cap growth between 95 and 2000 outperformed emerging. That's just a quick guess. I can get the numbers.
Sure.
2000 to 2000, up to the financial crisis, EM was, Chuck, you're right. Any big institutional investor, pension funds, endowments and stuff, everybody loved EM. Great demographics, low debt. Debt denominated in local, not dollar currency, which made them less subject to currency movements. Everybody came up with after-the-fact stories to explain their rise and why they would continue to go up. It was the darling of the moment, just like tech was the darling of the moment, more than a moment, in the latter half of the 90s. So anyone who's lived through a few market cycles, who's been halfway awake, has observed long streaks followed by reversals of fortune. This is, you called it mean reversion. I think that's a decent way to think about it. And the size of tech right now, and I forget whether you started with this point or whether we're going to get to it because Tucker put it at the top of the stack, but tech relative to the rest of the market is extraordinarily disproportioned. The market's all distended out of whack with these large tech companies, and I'm not making a profound prediction when I say here that's going to reverse. I just don't know when.
And I think this gets at a couple of things. First, let's talk just about what we are seeing in terms of that shift that you've seen in terms of what we're seeing with those companies at the top in terms of valuation, just because I do think this is an interesting place to start from on this.
Yes. And
this is using data. JP Morgan, I think is it every quarter or every month that they put out their guide to the markets?
I want to say more frequently than at least a couple times a year. So yeah, it's pretty frequent, quarterly or monthly. Yeah.
So their most recent one, they took a look at the S&P 500 and the top 10 names in the S&P 500 by market cap. They said currently have a PE ratio of 25.9. The rest of the index has a PE ratio of 16.8 times forward earnings. And on that top 10, it's running 128% of the average PE ratio that you see for companies in that top 10. And on the rest of stocks, you're seeing it's running 106% of the average that they typically run at in terms of PE ratio. So it's making the case that, yes, those top stocks are dramatically overvalued relative to the rest of the index. And so when you put all this together, Mark, and again, we have seen two bubbles in the last 20 years of large tech companies. This one is different because the companies that are getting run up at least have giant profits in most cases. No one looks at Microsoft and says, well, you're going to be out of business in 2 years like Pets.com.
No, I don't think so. But at some point, earnings growth. Look, PE, which you just referenced, is a ratio, as the way we say it suggests. It's price divided by earnings. Nobody disagrees on the numerator, the thing on top. That's just price. Earnings, there are different definitions for. Some are better predictors of future performance than others. But no matter how you slice it, when you take the ratio of two things, the growth rate, this gets a little technical, but it's an interesting point. The growth rate of a ratio of any two things, whatever you want to put on top, whatever you want to put on the bottom, is the difference in growth rates. That's just the way the math works out.
Yeah.
So in terms of, say, tech stocks, over the last 10 years, PEs have doubled the ratio of price to earnings. That means if you use the rule of 72 and combine it with that little technicality I just mentioned, that means price growth has outpaced earnings growth by a little over 7% over the past 10 years. That can't go on indefinitely. If it did, tech stocks would become the whole market, the whole economy, the whole universe, which is why these things, as you like to say, Chuck, they go on until they can't anymore.
Isn't the promise then, we talk an awful lot about diversification when it comes to building a portfolio, and there's this idea that's out there that diversification in the long run leads to optimal returns. In these types of markets, Mark, isn't diversification, isn't the very promise of it that by nature of diversifying, you almost should underperform in these types of markets?
Sure.
Because you're not as concentrated in those few names. But then the counterpoint to it is, down the road when those come back to earth, you should see stronger performance in that scenario. It's diversification more than anything else to me. It creates smoothing, not necessarily better performance every year. And I think that's a misconception about diversification sometimes.
Absolutely. If you're diversified, by definition, there's going to be an asset class out there. When we say asset class, we just mean broad type of investment. I think about them as ingredients. So you want to combine these ingredients, big stocks, small stocks, foreign stocks, maybe commodities. I don't love them personally, but a lot of institutional investors use them. They use infrastructure now. Those of you with pension funds that get your reports, you see this. Natural resources, real estate. These are all major investable asset classes. A sophisticated, diversified investor owns a slice of them, built around a core of U.S. equities, typically public and private. They're always at the center of any diversified asset allocation, but they're complemented by other stuff. We all know that from year to year, one major investment type, one so-called asset class, will outperform, another will underperform. So if you are diversified, you're going to get something closer to an average return, weighted according to how much you own of each. So it's not really a simple average. I'll call it a weighted average of everything you own. So of course you're going to underperform the best asset class in your portfolio. If you own an index fund, your index fund is going to underperform the best stock and outperform the worst stock. That is the nature of diversified investing.
Let's take a quick break here. When we come back, we'll talk about whether or not the Federal Reserve should get any credit for the fall in inflation.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall's in full swing and the cold weather's coming, but now is the perfect time to get a head start on your next vacation. The U.S. Virgin Islands have been named one of the top Caribbean destinations so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or no money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark, how much credit do you believe the Federal Reserve should get for the decline in inflation?
I'd be a little more generous than the author of the piece that we're going to be talking about, because expectations are an important component of inflation dynamics. If people think prices are going up, they'll ask for higher wages. That pushes up prices, and then wages in a vicious circle. And the Fed seems to have convinced people that it's going to hold the line on inflation. So I'd give them credit for expectations, but not credit for the supply side stuff, which McIntosh talks about in this article, over which they had no control.
When you talk about supply side stuff, what types of things are you talking about there?
I'm going to say it's not quite supply side. There's supply chain, which is different. Supply chain snarls are widely thought to have contributed to prices going up, and that's, I think, fair. There's some empirical support. There's some evidence in the data that is support for that idea. The other part of other things that change supply, backing up, there are two sides to economic activity, just like there are to prices that get determined in a market for apples or pizza or whatever. There's supply and demand. And on the supply side of the aggregate, if you sum everything together, we just use the fancy term aggregate for that, you've got the supply of labor, you've got things like oil prices. That's the supply side of the economy. So in the old days, when Republicans had a coherent economic philosophy and they talked about what they wanted to do for the economy, they talked about policies that would increase supply to both lower prices and improve growth. Then there's the demand side of the economy, which people on the left of center, so-called Keynesians, like to talk about, consumption and stuff like that. I forget what the original question or point was. Somehow I went down that path. But anyway.
No, that's fine. So I think part of what I'm looking at here, and when we're trying to grade the Fed in terms of their response, there are a couple different things that I think we have to digest here. The first is we hear the phrase an awful lot when talking about interest rates. There are long and variable lags. And, Mark, I don't – you know this stuff better than I do. Generally what I've seen is that when you look at how long it takes from the Fed to reach tight enough monetary policy to the time where the economy actually starts slowing, it's usually somewhere between 12 and 24 months. It's a 1 to 2 year period. It's when we talk about variable lags, it's not like you wait 5 years, correct?
Not historically anyway, no.
So I look at this and I say, based on the way that I like to look at the tightness of monetary policy, I think we finally probably got to tight monetary policy maybe in Q1 of this year. So I think that the criticism that I would level at the Fed is, hey, you were way too slow on the upside, or on kind of the upshot in terms of how quickly you got to the type of policy that we needed. So given the lags that we normally see, it's probably too soon in a lot of cases to measure if they had any impact, just because it takes a while for it to filter into the economy. As such, on the inflation expectation side, yes, I think you can give them credit there, because the communication policy and the talking they do certainly gets you some improvement on that side. But on pretty much everything else, I would tend to agree that there's almost no impact that the Fed has had to this point on meaningfully slowing the economy in the aggregate. I think you're starting to see it over the last little bit here, but remember, we just had a 4.9% GDP print. I mean, if you want to look at a counterfactual, let's say the Fed hadn't done anything. What's that GDP
Chuck,
print in there?
if you had transported these numbers into the 1990s, this would have been i.e., unemployment below 4%, real GDP above call it 5%. I know that's just one quarter. But over the past 12 months, real GDP, and when we say that, we just mean after inflation, growing at about 3%, way above potential or trend GDP.
Yeah.
Other measures of slack in the economy, and slack just means the degree to which we're using our resources, industrial production, capacity utilization. These needles are all way to the right on the meter. If you had transported all this data into any other decade with maybe cooler-headed, saner people, frankly, there would have been an outcry for and, oh, by the way, core inflation running somewhere between 3 and 4%. All these things together, there would be enormous pressure on the Fed in any other environment to raise Fed funds way beyond where it is today. Of that, I'm fairly confident.
So I think we're both in pretty strong agreement that, yeah, there's been some movement on the edges as far as inflation expectations and things like that, but the actual raising of interest rates has not created the amount of drag that you would have expected it to in the economy.
No, that's how monetary
or the amount
policy
that you would
works.
have liked to see to this point necessarily.
It's a pleasant surprise, but it's a bit of it's also a disturbing surprise because it's so counter to the way we think monetary policy works, which is squashing demand, causing a recession, frankly, and wringing inflation out of the economy. That, historically, is how we've gotten inflation under control. That hasn't happened this cycle, and underlying or core inflation remains high.
Mark, quick little piece of breaking news. I don't know if you saw, but ChatGPT is currently going through a major outage, according to them.
I did not see that.
Is this how the AI takes over, do you think?
I don't know why we show why we give AI access to Terminator movies. We're giving them the blueprint.
It's true. If there's one thing you want to restrict them from, it's that.
It's watching that movie. Yeah.
Yeah, you don't want an AI that can talk authoritatively about Skynet. Let's take a quick break. When we come back, it's Wall Street Watch, and we're joined by Todd Lutsky.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Susan and Mike from the Armstrong Advisory Group, and this month we're talking about our free guide, the top year-end financial tips. Mike, the holidays are coming, and that brings with it the desire to gift to your family. What are the rules around the annual gifting limits?
Well, you, Susan, owe me a gift every single year, as we know. But I don't think that's what we're actually talking about. What the rules state is that you're able to make gifts in 2023 up to $17,000 without triggering any sort of reporting or paperwork requirements to the IRS. If you go above that $17,000 exemption amount per person, then you do have to file a gift tax return, but it doesn't necessarily mean that there will be any taxes owed. That's where a tax professional really comes into play here to make sure you understand what the ramifications of that are. But gifts to 529 plans, for instance, if you're looking to fund a specific goal, are very common this time of year.
So if someone's thinking about gifting away as a strategy to reduce their taxable estate, Mike, how do they go about that if they want to give away much more than the $17,000? That's the freebie, if you will.
Honestly, more than we can get to in a quick discussion, but you need to talk to a couple of planners here to make sure you understand the tax ramifications and understand the current limits, because states like Massachusetts just completely redid their estate tax, so there's new things to know about that type of strategy.
Folks, we have information about gifting as well as much more in our brand new guide, The Top Year-End Financial Tips. You can get your copy today by calling 800-393-4001. That's 800-393-4001, or request one online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after the S&P 500 and NASDAQ notched their longest winning streak since 2021, markets today are mostly flat as investors will be monitoring a speech from Fed Chairman Jerome Powell later on today. At the moment, the Dow is up by 31 points, S&P 500 is flat, edging higher, and the NASDAQ off by 22 points. Russell 2000 is off by over 0.5% or 9 points. 10-year Treasury yield, that is down by 1 basis point, now at 4.55%, and crude oil down 1.33%, trading at $76.36 a barrel. Shares in Rivian Automotive, after jumping in pre-market trading, they are retreating by 4% at the moment, after the electric truck maker upped its production forecast for the full year by 2,000 units to 54,000. Rivian also posted a smaller than expected loss for the third quarter. Again, that stock is down by 4%. Meanwhile, eBay beat Street forecast for its third quarter earnings, while its revenue came in line with expectations. However, the online marketplace giant revealed weaker than expected guidance for revenue in the current quarter and full year. That stock down by 5%. Robinhood shares sinking by 13.5% after the trading platform missed third quarter revenue forecasts, generating $467 million, below estimates of $478 million. And after the closing bell, Disney will post their third quarter earnings along with an update on subscriber numbers to its Disney Plus streaming platform. That stock is up by 0.33% so far. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And as promised, we're joined now by Mr. Todd Lutsky from the law firm of Cushing & Dolan. We call the segment Ask Todd because you get to ask Todd your questions about your estate plan. The studio line here is 888-205-2263. So get calling if you have a question that you'd like to ask Todd about your estate plan or about your lack of estate plan if you're a little concerned on that end. Again, that phone number is 888-205-2263. We will be taking your calls during this segment, so please get calling at 888-205-2263. Mr. Lutsky, how are you today?
I am doing well, and how about yourself?
I'm doing great. I bought my daughter a fridge for her birthday.
A fridge?
I can't wait to see her face light up when she opens it.
That's good. I like that.
Todd, let's talk a little bit about gifting. And let's say that someone has a highly appreciated asset.
Yeah.
It could be a property. It could be a stock. It could be whatever it is.
Right.
Something that's gone up a lot in value.
Mm-hmm.
What are the considerations that person needs to take into account in terms of potentially gifting that asset, who to gift it to, how to gift it, or whether they even should?
And I think all of those are fair questions that need to be answered anytime you're going to try to make a gift. Even though the government makes it appealing to gift, right? And let me tell you why it's appealing. It's appealing because we have currently a $12,920,000 gift tax exemption. I know it equals the federal estate tax exemption, which it does, but they are separate, and you can give away that much assets and not pay a gift tax. So, hey, it sounds appealing. It's not always appropriate. So you're right to say, Chuck, maybe I don't need to make a gift. So when you're making a gift, you should consider, one, whether you should and maybe you shouldn't. If you're making a gift and you realize that your overall estate is under the $12 million exclusion, or even the lower exclusion as we go along to, say, 12, maybe it's going to fall to about 6.5 to 7 million come 2026. So if I'm under those exemptions, and double it, by the way, if you're married, if I'm under that, then the gift I'm making probably is not helping me at all to save federal death tax. Well, if it's not helping me save federal death tax, then the question is, do I even really need to make that gift? Well, maybe not. Okay, well, Todd, what if I'm under the federal exemption, but I'm over your particular state exemption? Well, that's something to consider. Now I don't got a federal tax, but I have let's say in Massachusetts, I have a Massachusetts tax, which although we know the exemption went up to $2 million recently from $1 million, the question is, do I make the gift? Well, if I'm under the $2 million, then no, I don't need to make a gift for tax savings at all. And in fact, if I'm under those numbers altogether, I would be making a gift. Not only would it not be helping me from a estate tax standpoint, it might be hurting me from a capital gains tax standpoint, right? Can you imagine if you're making a gift and you get no estate tax savings, but you gave away, as you indicated, Chuck, an asset that has low basis? I bought stock years ago. It has gone up. I give away that stock. The capital gain built into that stock, I also gave away. Folks, now I got no benefit on the death tax front, and I've stuck my kids or my whoever the beneficiary is that I gave that asset to with that built-in capital gain. Whereas if I had just hung on to it, I would not have hurt myself from the estate tax standpoint, and my beneficiaries could have inherited the property with a brand new basis equal to fair market value on the date of death, thereby eliminating the built-in gain, winning on both the income and the estate tax front. And one last comment. If I'm over the $2 million exemption, you still have to analyze whether it makes sense to give away the asset, because then you have to compare the Massachusetts death tax savings to the built-in capital gains tax burden that I am putting on whoever I give the asset to. So gifting's not so easy.
Speaking with Todd Lutsky from the law firm of Cushing & Dolan, if you have a question for Todd that you'd like to ask right here on the show about your estate plan, the studio line to call is 888-205-2263. That number again is 888-205-2263. We're going to go to a quick break here, but when we come back, it's going to be right to your questions. So that number is 888-205-2263. One more time, it's 888-205-2263. Quick break, right to your calls after this.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Let's get right to your questions with Todd Lutsky. First in the queue, we've got Bill on the Cape. Bill, what's your question for Todd?
Hey, Todd. Long-time listener, first-time caller. My mom, who's now 87, has a few annuities that her and my dad took out when they were younger, of course. And when the rates were certainly lower, the 3% guarantee was pretty good.
Mm-hmm.
But now that she's 87, I'm understanding, and maybe I'm wrong, but am I better off cashing those annuities in now while her tax basis is basically zero in lieu of us taking the annuity over? Because we are the beneficiaries, but if we take them over, aren't we going to get taxed at a higher rate?
So annuities are unlike other stocks, like when Chuck was mentioning, stocks and bonds or houses, right? Those annuities, and I am not a financial advisor, so I can't tell you the structure of this annuity, but I can tell you that generally annuities are set up where, as you said, they are deferred. They continue to grow at this guaranteed 3% rate that you indicated. And so if I put $100,000 in, and it's grown to $130,000 because the interest has kept building up inside there. When she dies owning those assets, that $30,000 of untaxed interest is still going to be subject to tax. There's no step up in basis on an annuity. That's earned income that just has been deferred. And so whether she dies owning it or not isn't going to eliminate that built-in gain. So, or not built-in gain, that interest that's accrued. So up to you whether you want to pay the tax at your rate, which I don't know what it is, or if she wants to terminate the annuity today, she could do that, and then that income tax hit will be hers. So might be lower if you do it now in her situation, her rate, rather than have it go to you. But folks, these are just some of the many things you need to think about when you're making gifts or not making gifts. So like Bill indicated here, does it make sense to terminate them or give them away now? In this case, it really didn't matter because that amount of tax that's built in there is going to remain built in there either way. But when you want to make a gift, please consider there's going to be IRS issues. And you know what? You might not be thinking about it, but there's a Medicaid implication for that gift, right? So the Medicaid rules for gifting are very different than the IRS rules for gifting. So consider that. We already discussed the issues of basis and how important that is. And maybe I just don't want to dump something into my children's hands and expose it to their creditors. So think about how you want to make a gift, or if you want to make a gift, but understanding that gifting is a part of your estate plan. Learn how to fit it in. Call and get the guide, Making the Most of Gifting Assets, 866-848-5699, or go to our website, legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another one for you. Sticking with the Cape, we got Albie on the Cape. Albie, you are on with Mr. Lutsky.
Yes, good morning. My question is this. My parents and my brother set up an irrevocable trust back before 2000. And my parents were a 51% ownership of this property. And it was an income property and their dwelling. They passed away, and my question is, this year the property was sold, and my question is, where does my basis start? Does it start on the sale or the passing of the ownership in the trust?
So did they die this year?
No, they died back in 2014 and 2015.
So 2014 and 2015, the date of death is going to determine the basis. At first, that's my initial gut. Now, not reading this trust, not knowing anything about it, sounds like it was irrevocable when they set it up. If that's the case, you really need to go back to the lawyer to find out if their 51% that they put in the trust, which I assume your brother did not put his half in the trust, correct?
Yes, it was set up in such a way that they controlled 51 and he and I had 49.
But that's not what I'm asking. On the name on the deed, did you guys deed over your interest in the property into the name of the trust, or is your name still on the deed?
Our name was on the deed.
Okay, so you guys did not transfer your 49% interest to the trust. Only your parents transferred 51% their interest to the trust. So if that's the case, the half that you guys own, the 49% that you guys own, there will be no step up in basis. So your basis will be half of whatever their basis was when they gave you the property. So when they gave you half that property, you got half their basis at the time. So that's way back whenever. However, if their irrevocable trust is drafted properly, when I say properly, the way we draft them at Cushing and Dolan is we make sure that the transfer by your parents to the trust is an incomplete gift for gift tax purposes. What that means is it's going to be included in their estate for estate tax purposes. Therefore, it will get a step up in basis as of the date of death. Okay, let's just assume for now that they died in 2015. In 2015, there would be a step up in basis then. So if the house was worth $500,000 then and half is in the trust, $250,000 would be the basis, and plus whatever you guys got when they gave you the property. So that's the issue for you there. So I don't know why it stayed in the trust as long as it did, but hopefully that'll help a little.
Todd, I don't know that we have enough time for one more question, just because I know that these can be some complex answers. But any last thoughts that you have, just wrapping up today on anything that you discussed?
I do, especially on the Albee case that he was just talking about. I think that's what most people need to really remember is when we talk about gifting and why we want to gift, right? It's if you gift, you trap these capital gains taxes. And in this case, back whenever the parents, I assume, gave them their 49%, that's when people aren't thinking about what's happening. It feels good, but if they only paid a little bit of money for that property long ago, then half of what they paid, they gave to their kids. So they stuck them with a low basis. But at least, thankfully, the other half could maybe receive a step up in basis when they die. So hopefully that helps them a little bit.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com.
Still a lot to come as we head towards the second hour of the show today, including we focused an awful lot on what's going on domestically, but take a little bit of a look at Europe as well as China just to see where their economies are going. Then a little bit of chatter about the shifting strategy that companies are employing for building electric vehicles. Are they, well, not are they, why are they shifting their plans and pushing some of those plans out into the future a little bit further? And then we'll also have a little bit of chatter about prescription drug prices and just why they're so darn expensive. Whole lot more coming up on the Financial Exchange. Stick around for hour number 2.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting your assets away. Todd, what happens if you give your home to your child in an effort to protect it from the nursing home and later on you decide you want to sell it?
Yeah, that's just one of the problems of giving away your house, but let's explore it. If you give your house to your child thinking, okay, that was easy, but now you don't own it. So now you really have no right to live there and, of course, no right to sell it. Right now, if you happen to have kids that are really nice and you ask their permission, which I don't ever want my clients to have to do, to say, please sell the house, you've also given them a huge tax liability because all the proceeds would go to them. Now, you don't have the money you need to buy your new house. And plus, if they don't live with you, then they don't get this capital gains exclusion that goes around along with selling your primary residence. So you're creating an adverse capital gains tax bill for them to pay. And then in addition to that, if they are nice, after they pay the tax, then they have to give you the money back, which could create a gift tax problem for them and impact their estate planning efforts. Finally, you get the money back, and then you can go ahead and buy another house. Folks, don't go through that. Set up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home, and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
As we kick off the 11 o'clock hour here on the Financial Exchange, we've got markets, at least equity markets, kind of stuck in neutral today with not much movement happening there. The Dow Jones Industrial Average is down 7 points. The S&P 500 is down, well, it's flat right now. The NASDAQ is down 17 points. Just not much movement happening there after a few weeks of pretty significant volatility, so maybe this is a welcome break for some folks. 10-year U.S. Treasury is down 3 basis points to 4.54%. We've got oil continuing its slide now, down another $1.60 a barrel, 2% to $75.77 a barrel. So lower oil prices continuing to be the story here as we move into November, and gas prices nationally coming down as well. If you take a look at the AAA national average, now down to $3.40. We were above $3.80 back in late September, so you've seen some nice movement down there, which I'm sure is a welcome relief for a lot of families as we head towards the holiday season. We got gold. Gold down $11.90 an ounce to $19.61.60. And that's what we've got moving in major markets here. Mr. Fandetti, there's a piece in the Wall Street Journal. It's got the headline, "Right now is a bad time to spend money." The subheadline, "With prices and interest rates high, this is a moment to focus on saving." Isn't that subheadline exactly what the Fed wants? Hey, we've raised interest rates high enough and prices are still high. Stop spending and that'll slow the economy. Isn't that exactly what they want to see?
I guess so. That'd certainly be one way to slow consumption. I mean, I know that's circular. Is that what is the Fed happy about a headline like this? I don't know. I guess. I'm sorry. I'm normally not this wishy-washy. I'm being too literal.
Not so much are they happy about the headline, but isn't the theory, or at least part of the theory around the Fed raising interest rates, that, hey, as you raise rates, because it makes it more expensive to borrow, consumers and businesses will borrow less and spend less.
That is a traditional mechanism through which Fed policy works, absolutely.
Do you agree that this is a bad time to spend money?
I feel like Ivanka Trump this morning. I'm being very guarded in my answers. Well, I mean, most of us don't have a choice. I find the whole, I guess I find the headline a little peculiar. Well, is there ever a great time to spend money? I guess if you're worried about your money outliving you or you are in Brewster's Millions or something, which was an early 80s movie starring, what was that, John Candy?
Well, I think in order to unpack this, and I think what you're getting at is there are certain things that you have to spend money on no matter what. You are required as a human being to eat food. It's just a basic prerequisite of being alive. Now, the decision could be, hey, do I want to, go out to dinner versus eat at home? But ultimately, spending on food is something that you kind of have to do. I think that when we look at the way that this is phrased here, I think it's much more when we talk about anything that's a discretionary purchase because of how high interest rates are and the fact that a lot of families don't have a ton of room in their budgets for discretionary purchases and often have to push those to credit cards. I think this might be making the argument, hey, because of how high rates are, it's not a great time to be borrowing money, whether on, a credit card or other kinds of borrowing as well. I mean, think about, I talk to people all the time who, for the last decade and a half, they had a home equity line of credit that maybe they had outstanding because the rate was at 2.5%, 3%, and they said, no, I'll just pay the minimums on it, pay it off over a long period of time. And maybe now they've said, gee, that rate's gone up to 7 or 8%. I'd kind of like to wipe this out if I could. And so it's shifting some spending and saving habits in those places as well.
Yeah, not a good time to borrow for a discretionary. It's not funny. Some people have to, but if you could postpone a high interest loan, yeah, I guess. It seems I'm just not sure what the point is. Yeah, okay, it's not a great time to borrow. Interest rates are up, unless of course they're higher in a year. I don't find that as a plausible scenario, but maybe. In which case, it'd be an awesome time to borrow now. I don't know.
The other piece, I guess, maybe where you're also trying to get. I'm just trying to get inside the Fandetti head.
Good luck. Or
I think you're trying to make the case that it's never a good time to overspend.
Yeah, maybe I'm just having a hard time relating because I'm a saver by inclination. Unless I'm forced to spend money on something, I do so very reluctantly under a lot of protest. So it's always a good time to save to me. But the right time to spend is when you have to. I feel like Yogi Berra. Like I'm saying the obvious. But I also think many of the points in this article were sort of obvious.
And here's the thing, Mark. People still quote Yogi Berra.
Yeah.
To this very day. He's been... When did Yogi die?
Does it matter?
I'm just... Well, it kind of... Mark was saying, hey, it's like Yogi Berra, stating the obvious.
2015.
Oh, that's more recent than I would have thought. Anyways, so, yeah, I think that this is simply making the case that at this point, with interest rates where they are, and again, kind of obvious, yeah, it's not a great time to be going out and borrowing a ton of money in order to finance purchases of any kind necessarily at this point. Let's talk a little bit.
Okay.
Yeah,
I can get on board with that.
Yeah, let's talk a little bit about this piece from Bloomberg talking about the earnings recession that we just went through. And specifically, when we talk about an earnings recession, the idea behind it is, hey, a period where you have earnings declining year over year and seeing that repeat in a few different quarters. Yes, you might not have gone through a recession in the real economy, but from an earnings perspective in the S&P 500, you did. And what this is talking about is that the forward estimates for earnings growth over the next 3 to 4 quarters are showing a return to positive year-over-year comps in the aggregate. Mark, here's the piece that I continue to have trouble with, is when you look at where this earnings growth is projected to come from, there are two issues, really. The first is we're seeing earnings growth going out to, the end of next year where it's, 10, 11, 12% earnings growth on 5 or 6% revenue growth. I'm just not sure where the margin expansion is going to come from, given that margins have been contracting for the last 18 months now. And the second piece that I guess I'm trying to struggle with is we just posted a quarter of 5% GDP growth. In the first 2 quarters of the year, we're north of 2% GDP growth. If we think growth in the U.S. is going to slow, why do we think earnings growth is going to accelerate?
I don't know. We've had booming nominal, that is, including inflation, GDP growth, economic growth for the past 2 years. Earnings have gone nowhere. So, yeah, why? Where's it going to come from now if GDP growth is going to slow? I think is your question.
Yeah.
Actually, you asked specifically that question. I'm just stalling here. I don't know, Chuck. Somebody's got to have some big tricks up their sleeve, or multiples just keep growing. This goes back to the point we were talking about in the first hour, which is the price that you pay for a stock relative to earnings, which is one way, the so-called PE ratio, which is one way of comparing stocks to themselves over time, stocks to their own past prices, that is, to answer the question, are stocks cheap or expensive? Also a way to compare a cross-section of stocks, what looks better right now, technology or industrials or materials or whatever. PEs in many sectors, not all, are off the charts relative to, say, their long-term average. Technology is particularly eye-watering in terms of so-called valuations, PEs, which, again, PE is like using price per square foot to compare one home to another, which no two companies are perfectly comparable, just like no two homes are. So it's a convenient way to do that. PEs are eye-watering on average, and in certain sectors like tech in particular, earnings better catch up. If they don't, that means stock prices will come down at some point. They almost have to rationalize PEs.
Let's take a quick break here. When we come back, we'll do a little bit of trivia, and then we'll talk about automakers delaying some of the spending that they were going to be doing to build more electric vehicles. We'll discuss that when we return.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Hi folks, it's Susan and Mike from the Armstrong Advisory Group to talk with you today about our top year-end planning tips, which are featured in our brand new guide for the month of November. There's a lot of information in this guide, Mike, that we can certainly use throughout the course of the year, but some of the tips that we've included, if you don't implement them before year-end, it's too late. What are those?
Yeah, so a lot of them have to do with retirement accounts. So for instance, if you have a required minimum distribution, that's a 12/31 due date, and most of the custodians actually require you to do it earlier than that, so get on it if you have an RMD. If you're considering a Roth conversion, that also needs to be done by December 31st. You can't do it until your tax filing deadline. And 401k contributions, once again, must be in to your employer-sponsored plan before year-end. You have a little bit more flexibility if you have an IRA, but with some of those things, it's by year-end, not the tax filing deadline. There's also a big one to keep track of this time of year that a lot of people look into, and that has to do with harvesting potential losses. And given the way that markets have fluctuated this year, it very well could be that you have some capital losses in an investment portfolio, and at least looking at those and seeing how they could benefit you from a tax perspective is important. Obviously, caveat, speak with a tax professional or advisor when looking at this type of thing.
Great. Thanks, Mike. Folks, you can request your free copy of this brand new guide by calling 800-393-4001. That's 800-393-4001. You can also request your free copy of our top year-end planning tips guide by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. On this date in 1966, Ronald Reagan was elected governor of California. Reagan served as governor from 67 to 75. Reagan was not the only movie star to serve as governor of California. Arnold Schwarzenegger served as governor from 2003 to 2011. Unlike Reagan, Arnold can never become president because he was born outside of the U.S. Trivia question today, pretty easy one here. Which country was Arnold Schwarzenegger born in? Once again, which country was Arnold Schwarzenegger born in? Be the 8th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, I'm going to quote from the New York Times here. Normally, a 50% increase in sales is considered very good, but when the number of electric vehicles sold in the United States grew that much during the third quarter from a year earlier, it was a disappointment. Car makers and analysts had expected more. And when we talk about EV sales, obviously, again, we're seeing still pretty robust growth when we talk about 50% year over year. But we're seeing a number of manufacturers say that they're going to push out some of their plans for expansion of EV production by a few years in order to be a little bit more deliberate about this. So here's my opinion on what's going on. Most of the plans for these rapid EV expansions, and again, 50% a year is still rapid, but the dollars committed in the tens of billions of dollars over the next few years, most of those announcements came during 2021 and 2022, and specifically the early part. And I reference that because during those times, if you looked at the multiples that pure EV companies were trading at, the Rivians of the world, the Lucid Technologies, all those companies that had IPO'd back in 2020 in the EV space, or that had SPAC'd into existence, depending on how they... I guess you can SPAC. We've made SPAC a verb now. That's fine. But in terms of the announcements made by the legacy automakers, every CEO is ultimately looking at one thing, and that's, hey, what's the story that's being told by my competitors, and is the market rewarding that story? It's why Disney, 4 or 5 years ago, started trying to say that they were a streaming company more than anything else, because they wanted to be valued like Netflix as opposed to being valued like Six Flags or Cedar Point Entertainment. So when I look at what's going on now, I'm not sure that the actual EV sales are that disappointing compared to, realistic assessments of where the growth is going to be. I think it's much more, hey, we're not seeing pure EV companies, aside from Tesla, being rewarded the same way they used to be. Why are we going to accelerate these capital expenditures now and make our profits look awful for a few years if we're not going to get rewarded for it in share price? And I think it's the right decision to make for these companies, because ultimately that's what you're judged on as a CEO. Hey, how do your share price do? And you're not going to be rewarded for that the same way that you were a few years ago.
Will GM or Ford ever merit those valuations? Will they ever? Could they credibly claim to be technology companies like Tesla does? And I had a far more simplistic,
No.
So they're never gonna. I know that's an excellent lens through which to view it, because we all know that the vast bulk of executive compensation comes through share appreciation, and if it doesn't get your share price up, why bother? I just attributed it to rising rates. It says here the average EV went for median or average average price paid for an EV. This surprised me, $51,000, down from $65,000 last year. So on the same price EV year over year, if you factor in the rise in rates, you're paying about another $1,000 a year, which doesn't seem like it would break the bank, but for some that might be decisive. I don't know. The price difference, of course, more than makes up for that. Your monthly payment would be lower.
The other piece on this is that there's so much competition for materials to build these cars now. We saw in Ford's latest earnings quarter, they're losing money hand over fist trying to build these things. And I know that they said, I think that they lost like $31,000 on each EV they sold in the quarter. And Mike and I were kind of like, well, how's that possible? Because like even the battery doesn't cost enough to drive that cost as it is. I'm guessing it's probably some tying in of the fixed investment costs that they're getting to there. I'm sure that with like each marginal unit, they're probably not losing $31,000. But either way, they're looking at this and saying, why are we if we're going to be losing money based on the construction cost of facilities and how much it costs to ramp this stuff up, we need to be a little bit slower and more deliberate there, because the mechanism for us paying for that in theory is if we could have our stock valued more highly, great, issue some shares and do some dilution there. But if you are Ford, it's one thing to say, hey, our stock is, we think it's going to be worth, $30, $40 a share. We can do it there. Oh, gee, now we're trading at $10 a share. It's not, maybe that strategy isn't going to work for us.
Yeah, it's hard to see at these production levels, and given the alarming, in a relative sense, slowdown in sales, how we hit our politically imposed sales goals. I mean, how do we get there in 10 years at the current clip?
This is why I think that hybrids are the answer.
So do the Japanese.
I'm very much on Team Toyota when it comes to this. And I say this as someone, look, I have a household that has one EV and one internal combustion engine vehicle. I love both of them. I don't have a problem with either. But from a national perspective, I think hybrids are the answer. The other one that's interesting to me, did you see the pickup that Ram just unveiled?
No.
It's a truck with electric motors and a battery. The battery's not huge, I don't believe. But attached to it, not attached, but built into it, it has a regular V6 engine that, instead of working as a normal engine, instead works as a generator that creates electricity for the battery that feeds into the motors then. So you're always using the smoothness and power of the electric motor, and the gas engine just works as a generator for it, which I think is kind of interesting in terms of the framework. Obviously, if you're looking at it from a climate perspective, it doesn't really fix that, but
yeah,
I think
what's the point of that?
Well, when we talk about the benefits of electric motors, It's the
just from the
simplicity and
driver's point of
smoothness
view.
of it.
Yeah,
And think about it from, the perspective of moving parts in a transmission and stuff like that. There's less maintenance overall.
Yeah, okay. Is that technically an electric car? Would that qualify, for example, for the tax credit?
No idea. No clue. Just another one for
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, how much control do I have over that? I got none. I got to rely on them to pretty much do everything, not to mention the fact that, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. What about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Trivia question today was, which country was Arnold Schwarzenegger born in? That would be Austria. He was born in Thal, Austria on July 30th, 1947. Arnold immigrated to the U.S. in 1968 and made his first movie, Hercules, in New York 2 years later. Winner today was Anthony from North Providence, taking home that Financial Exchange Show t-shirt. And Anthony's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
I don't know if I'm in the minority on this or not, but I happen to think that Arnold Schwarzenegger is one of the most impressive human beings of the last 75 years.
Yeah, I think that's pretty accurate.
You just look at what he's been able to do.
He's such a positive guy, too.
He is, but you look, again, was not born in the U.S. Didn't speak a lick of English, basically, when he came to the U.S., and became one of the most famous, people in entertainment. Obviously had a very successful career as the governor of California for, I believe, 2 terms that he served there. And, again, just a really impressive person, I think, in terms of what he's done, in my opinion. Mark, let's talk about this piece from the Wall Street Journal. Same drug, 2 prices, why the higher price prevails. And so, just as an example, I'm going to quote here. Take the widely used insulin, Humalog. I don't know which one. Eli Lilly sells the drug for $274 a vial, as well as an identical but unbranded version for $25. I'll quote that again. Eli Lilly sells the drug for $274 a vial, as well as an identical but unbranded version for $25. Half of Americans have insurance coverage for the less expensive product, half as many have coverage for the insurance. Half as many Americans have insurance coverage for the less expensive product as for the higher priced one, which accounts for 61% of prescriptions. Now, maybe there's some, significant difference, but again, this says that they are identical but unbranded. What's going on here, Mark? Because I'm confused. I'm sure you are too, because neither of us are, experts in drug pricing or why one pharmacy benefit manager chooses one, drug to cover over the. But it's just a mess that you have something that's quite literally, in this case, claimed to be identical, and yet we're paying 10 times more for the branded version.
My read of this is much like with mutual funds that have different share classes. Sometimes a 401k plan, they call them record keepers. If you've got a 401k, and I'm going somewhere with this. I'm not going to go too far.
I think I know
off
where
the
you're going,
reservation.
yeah.
They have different prices for different share classes. Why doesn't every 401k plan offer the cheapest share class? Well, there's been a lot of movement in that direction over the past 20 years as regulators have cracked down. But there are times when a fund manager, or in this case a drug manufacturer, will rebate part of the cost. That's my reading of this article anyway. A so-called pharmacy benefits manager, or if you want to continue with my analogy, the record keeper that runs your 401k plan, Vanguard, Fidelity, Schwab, whomever. They go for the higher priced one. get a rebate, and then lower costs for everybody. So people that use the drug get the shaft, it sounds to me.
Yes.
Like in some cases, this isn't a perfect analogy because your 401k provider will actually rebate the cost on a usage basis, not on a total plan basis. So it's not a perfect analogy, but overall, it can make more sense to go with the pricier drug. That's my read on why this peculiar result prevails in this marketplace. The other potential explanation is just price discrimination. Everybody learns about this in an economics class if you took one. A monopolist will charge different prices based on how sensitive people are to prices. It's really cynical, but it's like you charge the nicotine addict more for cigarettes than you do someone who smokes casually. Their demand is less elastic. That maximizes profit for the monopolist. You learn that if you take any theory class. I mention it because a lot of people have heard the concept. That's the only other explanation I can come up with. That's not as convincing as the first one.
Yeah.
To me.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December, according to U.S. News and World Report. December is the start of dry season on the island, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com, learn about all 3 islands, and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mark, are you an Amazon Prime member?
Oh, yeah.
Are you interested in spending $99 a year to get a membership at One Medical, the company that Amazon bought a little over a year ago?
How much is that going to save me? I'm listening. I'm
so
open to it.
Normally, to become a member at One Medical, it's $199 annually. I don't know exactly what One Medical gets you for that. Like, I don't know if that replaces your current doctor, if that's used to supplement your doctor. I don't know if that's used in like an urgent care setting. And so this is the problem with basically everything related to trying to build and market healthcare services is it's such a complex system. It's not like Amazon Prime where you just say, okay, even if I use nothing else, I get free shipping for a year by paying whatever.
Wouldn't an insurer have to add them as an approved primary care provider and then make it an option for someone who was willing to? And this is going to involve telemedicine for some. Not everybody lives next to a One Medical location. In fact, they're not in this area to my knowledge.
I guess I'm not even sure that they are a primary care provider, though. Like, I don't know what niche they fill.
Okay.
This is what I'm just reading a quote here. After its purchase of One Medical, some analysts suggested Amazon's ultimate ambition could be to build an expansive healthcare offering that could compete with traditional primary care and employer medical plans. So maybe they are. Maybe that's part of what they do. But I don't know what I get for this. And then beyond that, the problem that you always run into with healthcare is even if they do end up being, in-network as a primary care and this and that, how do I know they're actually going to save me money? And how do I know what my out-of-pocket costs are going to be? It's just... It's a very opaque system still.
Yeah, this feels very half-baked. It's like, telemedicine generally, although we all used it during COVID, is probably not going to be my first choice, all else equal. If we're talking about saving some serious schkarol, as my people say.
Yes.
Then maybe.
It's... Yeah, the telemedicine side of things, for very simple things, you say, okay, fine, like I can use it in those very basic instances, but you come in. Are you going to call One Medical for telemedicine? Hey, I'm having chest pains. What do I do? Well, go to the emergency room of the hospital, or it's. I don't know.
Yeah,
what...
you want the in option. You want the in-person option.
I'm just punching in like my address. The nearest ones are either Boston or Hyannis.
Oh, they are in the region. I'm sorry. Okay.
So I I think that Amazon may get out a little bit over its skis on this. I'm just not sure. The healthcare business is just not ripe, in my opinion, for a company to do this kind of stuff and say, oh, like, you get to be a member of this, because you don't know what you're getting. It's too complicated right now. And absent any more simplicity built into the healthcare system, or even this plan where it's, if you can say, hey, this plan, here's, everything that it covers for this, okay, fine, but what do I get for being a One Medical member at $99 a month? I mean, I'm sure that doesn't mean that my health care for the year just costs $99.
I mean, we're being a little cynical and silly about this, but let them experiment. Maybe they can adopt some innovation that's not immediately obvious to us, that'll improve service or lower prices. I like Amazon Pharmacy, for example.
Sure. Yep.
Especially in a pinch.
Yeah, absolutely.
Their Propecia doesn't work. My friends still call me President Biden, but,
whatever works for you. Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called the Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today. Or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News & World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's DAV 5K is Saturday, November 11th at Fort Independence at Castle Island. Now, the race is sold out, but you can still help by making a donation right now. So go to dav5k.boston and help support these great American heroes. That's dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
Mark, what do you have for me for Stack Roulette?
Chuck, did you know there's more than one type of, I don't know why I'm surprised I wouldn't know this, because I'm not a chemist or a dietitian or whatever, more than one type of starch found in things like pasta and white rice.
What's the kind that I use on my shirts?
So when you cook pasta or white rice, you normally eat it right away. I think most people like to eat freshly prepared food, but as it turns out,
yeah.
But we all know pasta tastes different. Rice tastes different. It's lumpier. Consistency changes the next day. I actually like it, maybe even better. But there are health. I bring this up just as, I don't know, a public service announcement. I have no insight here, but as it turns out, if you let pasta or whatever rice cool, for example, overnight, the starches transform into a healthier version called resistant starches as opposed to natural starches, which is their form when you finish cooking them, when you finish boiling them or whatever. Better for your gut throughout the digestive process is the long and the short of it. So there's something to eating cold pasta. I guess you can warm it up the next day, still get the same benefit. But there's something to leftover rice and pasta.
I'm curious. So here's a question that I have then. It's my understanding, and all of our listeners can correct me if I'm wrong, which is a decent possibility. A lot of Italian restaurants, not necessarily the high-end ones, but your standard Italian restaurants, a lot of the pasta that they make, the way that it's typically cooked, I believe it's typically par-cooked, where it's cooked like 2/3 of the way, put aside, and then when someone actually orders it, you cook it the rest of the way, and that way it's hot and fresh and coming out to you. I'm curious if in that circumstance, does that provide the same kind of benefits, because you basically cooked it most of the way and then kind of set it aside and let it cool for a while, or does the reheating then and the finishing of the cooking return it to its prior state, or does it not ever get there? You get what I'm saying?
Yeah, I wasn't really prepared to go deeper on this subject.
I know.
The article doesn't speak to that scenario. Interesting.
It just makes me wonder about it. And I don't have a good answer on it, but I'm curious as it relates to that. I want to talk a little bit about Robinhood. It's been a while since we talked about them, but they reported earnings, and I'll just quote here from CNBC. Revenue was hurt by a 13% decline in third quarter transaction volume tied to stock trading. Crypto trading dropped 55% year over year. Fewer monthly active users, which fell 16% to 10.3 million. It's fascinating to me how consistently this cycle we've seen IPOs of different companies mark the respective peaks of their industries. Yeah. The Robinhood, the IPOs of both Robinhood and Coinbase, both happened almost exactly aligned with the peak in the retail trading frenzy. More recently, do you guys remember back in September, ARM Holdings, the chip maker, did an IPO? I think it was like the second week in September. And it is now off from its initial price. I think it's down like 13-14%. NVIDIA has been sliding since then as well. It marked, like, at least in this cycle, the peak of that computer chip frenzy, the semiconductor frenzy. And we see this just an awful lot where it's a fantastic contraindicator that it doesn't work all the time, but you just kind of see the cash out from different industries happening as at the peak of their respective
Yeah,
cycles.
That's not a coincidence, right? They
No,
do time the offering with maximum interest and value. It still amazes me that anybody would jump into an IPO, given that the value's already been extracted. Sorry.
The other place that you see it as a great indicator is when a business puts its name on a sports arena. Run, don't walk to the nearest exit, because it's just like, case in point, 2 years ago, the Miami Heat's home stadium. Do you guys remember what it was named?
FTX.
FTX Arena. Gee, that didn't work out
Yeah.
too well. You have is what was used to be the Staples Center, is that still the Crypto.com Arena, or did they rename that?
I will look that up.
Mark, do you remember what Gillette Stadium was supposed to be before it was Gillette Stadium?
No. What?
CMGI Field. It was a tech bubble company that literally didn't survive long enough for the stadium to finish construction before it went out of business.
It is still Crypto.com Arena, by the way.
It is still Crypto.com. You see it so often with sports stadiums where they get named after something and immediately, like, something. The most glaring one before FTX. You guys know Minute Maid Park down in Houston?
Yep.
The Astros home stadium?
Mm-hmm.
Remember what it was originally called?
Oh, no.
Enron Field.
What happened with that company?
It got built literally as the Enron fraud was being perpetrated, and then, boom, just like that, it's done. Nothing scares me more than a company slapping its name on the side of a sports arena. Because it's kind of like, well, we've got all this money. What do we do? Okay, this will be great for branding. And it's usually near the peak of their recognition.
Yeah, it would have to be if they've got the money to spend. They don't have internal opportunities. There may be a little bit. There are lots of counterexamples, I guess. But,
there are.
But if the companies say younger than 5 years old,
yeah, it's the up-and-coming ones.
Yeah, it's the parvenus. Yes.
You know, it's the City Fields of the world, or the TD Gardens.
You're
it's like,
fine.
okay, those guys have been around forever. But you get the FTX Arena.
No, you're right.
It just gives me the willies.
Rivals.
It gives me the willies.
Yeah. Excellent. Yeah. Excellent point.
Taking a look at markets right now, we've got still not a ton of movement, but a little bit of downward drift. The Dow's off 50 points now. The S&P's down 3. NASDAQ's down 12, so not much movement overall. Some stability the last couple days here. 10-year Treasury is dropping again, though, down another 4.5 basis points to about 4.52%. We got oil down another $1.57 a barrel to $75.80 on West Texas Intermediate, and on gold now down $12.20 an ounce to $19.61.30. So some stability in markets. Not a ton of movement after what had been a chaotic last couple weeks of October and start to November, with a lot of volatility in both directions over that time period. We're going to take a quick break here, but don't worry, we're back at it tomorrow. We got more Financial Exchange coming up, including tomorrow's a Thursday, so we do get new weekly jobless claims and continuing claims, something that we're watching closely to see if there's any real-time shifting in the job market. That and more coming up tomorrow on the Financial Exchange.